All right, let's get into this. It's a move that defied expectations. The RBA yesterday lifted interest rates by 0.25%, bringing the cash rate to 3.85%. That's the highest we've seen in more than a decade.
Let's bring in CEO of Yellow Brick Road, Mark Bouris. Mark, good morning to you.
Hi, guys.
Was this necessary?
I don't think so. In fact, I think it was the opposite. I think it was unnecessary. In fact, I think it's the rate rise we did not need to have. This is going to be the one that breaks the camel's back. And, you know, like with all these Federal Reserves and Reserve Banks around the world, they do not achieve the outcome they want to achieve until they break the system. It is about breaking the system. In other words, breaking us down so that we will stop spending money.
That just seems mean.
Yeah, I agree with you.
It's cruel.
I think, look, for me, the people who reach out to me and to our organisation, because we're a big lender, you know, they're sending us stories all the time about how they can't manage, how they've had to stop sending kids to school sports, they've had to sell their car, they've had to rent out a room in their house, they've moved the kids all into another room, they've had to cancel holidays, etc., etc. It is more than mean, it is destructive. And a lot of people's lives are being seriously challenged right now across this country, particularly here in Sydney and in some of the outer western suburbs of Sydney.
It feels like, I mean, you know, we want to get the inflation rate from 7, and they were saying yesterday it's to get it down to 2 to 3. Well, if it's slowing down, it'll get there. Why do we need to punish people to get it there? Why do we need to almost risk a recession to get it there?
Well, to some extent, sometimes a recession will definitely get it there. Yeah. So if you can put in a recession, the newspapers start talking about it, everybody gets in the headlines of a recession, I better pull back from spending altogether. The question has to be asked, though, is 2 to 3% the right target right now? Maybe we could say 2 to 3% is going to be the target in 3 years' time, 4 years' time. But maybe the target should now be something like 4 to 5%.
Yeah.
And are we starting to get towards that? Let's have a pause. The same reason, I think, is the reason they paused last month. That pause was led everybody up a garden path. So much so people started going out there and buying property and paying more money for property prices. Everyone going, wow, hallelujah, it's over. And then after pause, here's again with another rate rise. That's a real slap in the face for Australians. And I just think right now they're going down the wrong